Hi, and welcome back to the Food Fund, where we explore all things related to investing in food and beverage stocks. If you are new here, our goal is to help you put your money where your mouth is and invest in great companies. If you love food and love stocks, you will definitely love this channel. In this video we will be doing an analysis of Archer Daniels Midland Company and seeing if it would be a great addition to the Food Fund. Be sure to watch through the end of the video where I share my final thoughts on that. Also a big thanks to Pongop, who is an awesome subscriber and suggested this analysis. Now, let's go ahead and jump right in. Cue the logo. Let's start with some background info on Archer Daniels Midland Company, or ADM. ADM is a global leader in the agricultural processing industry and was founded in 1902 in Minneapolis, Minnesota. Starting as a grain elevator company, it quickly expanded into other areas of the agricultural processing industry. Today, ADM is a global company based in Chicago, Illinois, with operations in over 100 countries and more than 36,000 employees. They are involved in a wide range of activities, including grain and oilseeds processing, food and beverage ingredient production, animal feed manufacturing, and providing agricultural services. Okay, let's jump to the price action data. Starting with the 1-year chart, we see that ADM had a CAGR of about 11%. Zooming out to the 5-year chart, we see that ADM had a CAGR of 12%, so it looks like ADM has a nice consistent growth trend. Now, let's take a look at the fundamentals. Gross margin is 7.6%. Revenue has compounded at around 11.5% over the past 5 years and has topped $102 billion most recently. Great revenue growth, but from the chart we can see that there was a big pop in 2021, likely due to rising inflation. This cuts both ways and likely increased their costs as well. Viewing free cash flow, we see what is reported as a minus 25% CAGR over the last 5 years. Because free cash flow started the 5-year period negative, it is challenging to calculate the change in free cash flow. What we can determine is that the most recent free cash flow values are higher than 5 years ago but have been declining since the end of 2021. Capex has increased at a CAGR of 13% and stock-based compensation increased at about a 7% CAGR. Diminishing free cash flow and growing capex and stock-based compensation is very worrisome. I am prone to think that free cash flow will continue to deteriorate. Next, weighted average shares outstanding have decreased ever so slightly, reducing at a minus 0.3% CAGR. This is great to see. Despite the declining free cash flow, I am actually not too worried and am pretty confident the share buybacks will continue given the slow and steady pace of share buybacks. Now let's view my favorite metric, return on invested capital. Return on invested capital has risen from 9% in 2018 to 15% most recently. Nothing bad to say here. Efficiency is improving, though it seems the rate of improvement is slowing. Another favorite metric is cash conversion cycle, a measure of operational efficiency at the company. Going from 54 days in 2018 to 6 days most recently, ADM is demonstrating improving leverage. Seeing this means that they are getting better at efficiency and managing their inventory over time. Last, let's explore ADM's debt metrics. The current ratio is 7.9, the debt to equity ratio is 0.3, and the net debt to EBITDA ratio is 1.5. Very good debt metrics. The fundamentals of ADM seem split. Good revenue and return on invested capital growth are positive, but rising costs seem to be eating into free cash flow. In any event, should it be added to the portfolio? Before sharing my final thoughts on that, please click the like button and let YouTube know that you like the content. Subscribe and click the notification bell to make sure you catch the latest videos. Your continued support means so much to the Food Fund. Now, let's get into my final thoughts. Okay, let's go to the spreadsheet and write out some key values for ADM. It is a food company with a gross margin of 8%. The 5-year revenue per share CAGR is 12% and the 5-year free cash flow per share CAGR is minus 25%, but we will use the 10-year free cash flow per share value of minus 8% to manage the negative free cash flow years. Great revenue growth, but bad to see free cash flow per share decline. A return on invested capital of 15% is good, but not sure the upward trend will continue. Next, the cash conversion cycle of 6 days is good. No complaints here. Concerning debt, a net debt to EBITDA of 1.5 means the company can pay off its debts with about 18 months of EBITDA. Again, from a fundamental standpoint, ADM is okay. It is not horrible but not a slam dunk awesome company either. Now let's switch our attention over to valuation. ADM is undervalued relative to the S&P 500 with a ratio of 0.4. The price to earnings growth, or PEG ratio, is 1.9, which is pretty reasonable. ADM is a long-time agricultural processor and supply chain manager. The revenue growth is good but maybe due to the post-pandemic inflation bump. Additionally, the declining free cash flow over time is worrisome. Other than that, this company looks awesome and is a strong picks and shovels supplier to the food industry. Let's put it on the watch list and see what else is out there. Many thanks for watching. What do you think about ADM? Is there anything else you would add to the analysis? Please share your thoughts below. It is always great to hear from you. Please check out some more videos right now and don't forget to put your money where your mouth is.